Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, August 4th at about 1:15 p.m. Eastern. Well, this morning, the July non-farm payrolls report increased by only 187,000 workers, indicating that non-farm payroll growth is slowing for the second straight month after revisions. Still, the unemployment rate, which fell to 3.5 in July, 3.5%, I should have said, in July, is in the realm of a 50-year low and is a beacon of full employment that will keep consumers spending along with the increase in real earnings. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $451.64, about 45.16 on the S&P 500 itself. After the March low this year, right here, we know that it was down here at $380.65, and almost everything in the market made a March low of this year, this past year. And we can see in the ensuing uptrend how the SPY gained strength. It dipped down here again, down below the black line, the 20-day moving average, below the green line, the 50-day, and below the red line, the 20-day moving average. It crashed through all that, fell down to $380.65. And then we can see how this trend started gaining strength almost immediately. It rallied off those lows at 380. It busted right up on through the 200-day moving average, which could have acted as resistance, but didn't for very long. The 20-day moving average, which is inverse to the 50-day at the time. The 50-day acted maybe as a little bit of resistance here. You can see 3 or 4 days where it traded just below it. Then price popped up through that, then walked along the 50-day moving average. And you can see how these major moving averages really can act as price support for the indexes and certainly for stocks. They don't always, but they are certainly there. The 50-day is an impressive kind of a midterm moving average. Shorter term would be the 20-day, but the 50-day is one that is actually respected by analysts almost in all areas of the market. Now we can see here how it rose to an April high here of when the SPY broke out. It rose to an April high at 415 up in here. Then it consolidated on top of the 50-day moving average, as we just spoke about, came back down to the 50-day in April, rose up, came back down. Then it broke out in May, and of course we remember this when the debt consolidation was at least solved. And it broke out, the SPY broke out in May, so now we see it kind of noodling up to that 20-day moving average and using that more as a basis. It came back down, it broke out in May, broke out in May up to $420.72. Then we had another real quick drop here, almost down to the 50-day, but not quite. Then we had a sustained breakout starting in June, and it started out at 423 and broke out here in June, and then whoop, up we went up to this June high at 423 and broke out and used the 20-day moving average as support and a trend line. So you can see how this happened up here on July 27th, and that was down here on July 27th. It gapped open right here to $459.44 and then gradually fell down to yesterday's low, back below the 20-day moving average. Excuse me. at $447.37. Now we could see earnings season heating up here. We can see that the RSI was getting overbought. We talked about that. The RSI, the 14-day line, was up over the 70 line. That means that that almost everybody is long type thing. So it did gap open to this July 27th high of 459.44. And then for the last few days, this past week has dropped down to yesterday's low, below the 20-day moving average, below the red line at $447.37. Now, today we're back up a bit higher here on Amazon. Announced their earnings after the close yesterday. Amazon moved higher, so did Apple, and Apple moved lower. So we're kind of sitting here today, again at 451.64 so far, right at that 20-day moving average. So let's look at this and say, okay, let's call it. We've got resistance up here at 460. We also have potential resistance at this 20-day moving average, which is coming in now at $451.55. So basically, right where price is currently. Then we have support low at 447 down here. We've got the 50-day moving average coming in here at 439, 437. So all along here, excuse me, we've got plenty of places for price support for the S&P 500 or the ESPY. Now, please know that second quarter earnings season continues for the next couple of weeks. Disney's going to come out after the bell next week on August 9th. So please be careful and keep your stops in. Our next chart today is a chart of the Invesco QQQ, symbol QQQ. As you all know, this is the exchange-traded fund that closely follows our NASDAQ 100 index, which contains the top 100 non-financial companies by market capitalization in the NASDAQ. It includes companies like Alphabet, Amazon, NVIDIA, Microsoft, AMD, Tesla, all of those big guys. Now, when I captured this chart today, the QQQ was trading at $376.71, just below the 20-day moving average. It's doing the same thing it is to the SPY. The 20-day is coming in at $377.79. As we can see here, the QQQ is bumping its head on that moving average. Now, since January lows down here at 260, look left on the chart with me, the QQQ has come up, and I'm not drawing a straight line here, but it has rallied about 45% from those lows, so we can't complain. And we know that in March, when we had the lows here at 285, then the QQQ shot up to June highs. See how it came all the way up, walked up its 20-day moving average. I mean, it's just absolutely beautiful. Walked up to these June highs up here on June 16th at $372.85. It used 20-day moving average after that for support again. Notice how neatly it comes down to this 20-day moving average. Can you always count on that? No, of course not. But when it does happen, it's a cool thing to see and good to know that that potential price support is there. Now, it flew up to the July 19th high here, opening at 387.98, then dipped back down here to the 20-day moving average, then popped again and came up and then fell down yesterday to open at yesterday's low. That was Thursday's low this week at $371.77. So we know that 371 could act as potential support right now. So what do we have here? We have resistance at 373. Then I'm going to have to call resistance here at the 20-day moving average because price is under it at, again, 377.79. Call it 378 to make it easy. And then we have the 20-day moving average. Again, that's what is still resistance. Then we have support down here at the 50-day moving average at 366.50. Call it 366 if you want. We have come a long ways here. This has been a great ride. Could we see a little softening in August? That happens many times during a year. August can tend to be kind of a month where the second quarter earnings are done. Traders are still on vacation, and price can soften up a little bit in August, maybe not dramatically, but it can. So just keep that in mind. The Qs are in a great uptrend so far, but you want to make sure that you keep your protective stops in. The last chart we're going to look at today is the iShares U.S. Real Estate ETF, the IYR. It has 77 holdings, including Prologis, American Tower, Crown Castle, Public Storage, a lot of companies and REITs like that. Now, when I captured this chart today, the IYR was trading right here at $86.65. You can't see it on this chart, but it made an all-time high at $166.75 on January of 2022. Now, if we look at these lows here on this year's January, look left on the chart with me, these lows here at January, we can see that the IYR closed from these lows here and right at about 82, 83, then just shot up dramatically. Look at the IYR here. It rose up above the 20-day, was inverted to the 50-day. It quickly rose up over that, and the 20-day moved over the 50-day. It shot up in a very steep uptrend that was certainly a lot of fun, but we all know that when uptrends move that up in that steep of an angle, that there is a likelihood at some point that profit taking will come in. It did. The IYR moved up to recent February intraday highs at $96 up here and 2 cents. Then it tumbled down pretty quickly down to March lows. Oh boy, how many times have we said that this year? March lows down to $78.10. Then rallied back up to the 85, 86 level, came up above the 20-day moving average, and then kind of consolidated along this line, 85, 86 area, then fell down, then rolled down in May to about 80. That's the number I want here. So it rolled down in May back below the 20 and 50-day moving averages to about 80. Do I like it? Yes. Why? Because it turns out, I'm not going to be able to draw this. It turns out it's going to be a higher low. Another quick rally up over the 200-day moving average, which it couldn't hold, and came down to 82. So I started drawing the trend line today right down here at the May lows, ran it up to the June lows at 82, and then it rallied to way up here to 90 week before last, and then rolled over to the 20-day to where we are now. And so if I drew this trend line, as you can see how neat it is right now. Will it hold here? We don't know. We'll have to wait till next week. But I like the fact here that the IYR is now trading atop the 50-day moving average and the 200-day. They're both coming in together, and in the last 2 days, the 50-day moving average moved up and over the 200-day moving average. This is kind of a low-risk trade because I'm going to set a really tight stop, and of course, it's going to depend on what happens in the coming week with the broader market as well. So if in the coming week, if the IYR can stay above the 50 and 200-day moving averages, and right now the 50-day is coming in at $85.95, the 100-day is coming in at $85.78, and again, price is at $86.65. So they're all kind of in a tight knot here. Of course, our goal would be for the IYR to hold at these moving averages I just spoke about and then break out to the upside and use this as a pivot for the pivot lows where it is right now. So again, in the coming week, if the IYR can stay above the 50 and 200-day moving averages, and if the market itself stays relatively positive, I may add a small position of the IYR to my trading portfolio. I'm going to have in a tight stop at $84.96. If and when the IYR closes and rises to the past pivot high here so if it about 90, so if it rises and closes above $90.50, at that time I will add to my position, and of course I will have a trailing stop. So you may want to keep an eye on the IYR in the coming week. And now, if you'd like to become a more successful trader, this is the perfect time to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, trend trade, bottom fish, which is really good right now, and more, please go ahead and check out these programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all my online training courses. You can either go to the link on this screen, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.